I am. Thank God. It's still a struggle. I don't sleep very much because my skin is still reacting and trying to heal. And I feel like I have to bathe in hydrocortisone because it's
Oh my
just it
gosh.
has to rip itself off. I want to peel it off. As disturbing as it sounds, that's kind of what it feels like. But it's definitely healing, so that's good, but I still don't sleep very much, and I'm still on steroids that the doctor gave me. And I got to tell you what, steroids suck. I know I got several friends that have used them for training purposes, and they've talked a lot of good things about it. And I'm like, well, that's good for you. And they look fantastic. They look ripped out of their minds. But I must have got the steroids that suck like crazy suck because they keep you up for hours and
Oh man, that
hours and
sucks.
hours, and you can't sleep. And they suggest that you take them in the morning. So I do. And they're like, well, that'll help you sleep at night. It does not. Liars. It does not. So yeah, but I'm just I feel like I'm starting to drone. That's what I got a lot of military buddies, and the term is droning. They say where you're just continually active, but you don't sleep. And I mean, the other clinical term for that is, um, what is that? It's uh, uh, sleep deprivation. What's the insomniac? So
Oh yeah,
I
insomnia.
I want to sleep, but I can't because my skin's on fire. So I really do want to sleep.
That
So
sounds
these,
horrible, man.
so that's where they're like, yeah, it's they call it droning. My Marine friends told me it's called droning. It's where you desperately want to sleep, but there's some kind of agent in your body that's keeping you awake so that you can't. Good stuff. Good times. But I've got some good stuff to talk about. Short week, so that's kind of nice. This week and next week are short, so it makes things easier on us as traders, which is great because anytime we can get a break from the craziness of the market and still profit, I'm always excited and jubilant about that. So let's get cranking here. And so far, well, it's just three of us, and that's just fine. I got this recorded so everyone else can watch the recording. If you guys have any questions, of course, throw it in the chat. If it's something that is hard to say, feel free to say it out loud. I think that'll be perfectly fine. So, Tone and Katie, we are about to discuss a whole plethora of Forex trades. And I'm pretty excited about it because a lot of crazy things happened the end of last week and kind of all came together today, this morning. And I don't know anybody who watched the market this morning. It was quite a roller coaster. The market opened up. Futures were way down this morning before the bell, and miraculously, we ended up on a positive note in the Dow, not the S&P, but in the Dow, and it's just a lot of crazy volatility going on, and it made for some very interesting setups here in our Forex pairs that we've been watching. So I've got up the CAD Chef right now, CAD Swiss franc, and this is a pair that I talked a ton about. Right, we had pending orders on it to buy at 68.80, I believe, was the final or was the last pending order price. And today it dropped all the way down to 68.70. So plenty of opportunity to get filled. Now, here's the thing. If you did not have that pending order on, here's our trade box. So we're all on FX Trade because I know a lot of you are using Max, which is great. And Mac does not, or MetaTrader does not support Mac, which is ridiculous, but we are going to make do because this is just as good. your pending orders should be in. And if they are not in, let's go ahead and place them. So if you do not have the CAD Swiss franc trade already going, we're going to do that right now. So get your platforms up, and we're probably going to place a couple of trades today. So first off, as you can see here, these are my pending orders. And I'm not sure why this one didn't fill. Curious. Oh, it did fill. See? Yeah, there it is right there. Where did it fill? It filled at 68.90. So this one I got filled on this morning. And if you are not in the CAD Swiss franc right now, let's get in right now. Current market price. I like where it is at this current moment. So let's go ahead and just get long right now. So we're going to pull up Forex. And if you're following along, great. If you're just watching, that's fine too. Just make sure that you do execute this when you have time. And if you want to do it on paper, fine. On live, great. Either way. Let's use good money management. Let's go ahead and click on the CAD Swiss franc. And let's go ahead and pull up a buy order box. So as I mentioned, I like where price is right this moment. The pending order price was 68.90. We're at 68.93, 92, perfectly fine. So again, let's use good money management. At the current price, I'm going to switch back over to the chart here. At the current price, let's talk about what our overall direction on this. On a short-term basis, this had a nice breakout of this wedge, right? And you could say that there's a bit of a trend changing direction here. And this is why we didn't go long, you guys, because I wanted to see this kind of movement on this side to go long up here. We didn't get that, did we? So if we had gone long up here, or gone long here, we bought here, we buy there, we're not very happy being long where the price is right there, right? But that would have been if we had made the case of getting in too early, right? I'm perfectly fine with this trade going against me because this is a longer term trade. But the reason I bring up this is because these are fake outs. And anybody who got in here got faked out. And that's why when you look at a short time frame, you got to be very cautious. So I love trading on shorter term time frames for specific opportunities, which we're going to look at. So as you can see, we had a nice breakout here. That's why a 4 hour is typically the lowest I will go, because you can see that here it didn't look like it was. It very clearly did not close above this trend line, right? Very clearly, price is not trading here. Those are just wicks. So no big deal. That's why we look at the longer term time frame. So now we're at this price. We're sitting at this support level, but we've broken out of this wedge pattern here. So there's a good possibility that price will continue in a downward path, but let's look at overall the trend of this pair, okay? So on a year time frame, it has just been slowly making its way up, and then it's kind of gotten stuck right around this neckline. It broke out and couldn't quite hold it. But this support level here has held very well. And I expect it to do it again because, as I mentioned, currency pairs, they're cyclical. They want to trend. Doesn't matter which direction they want to trend. So let's bring this out even further. Even further. There we go. So now I'm on a month time frame. That means each candlestick represents a month. Clearly, I had a bunch of notes over here. So this has been going down for quite some time. Okay. This is where we're going to start to see I believe, a shift in the trend. Okay, we've been trending for quite a while. We had this huge break during COVID right here, but it's getting its footing. And as long as we can hold this area and this continues to provide support, I believe this is where this is going to be a nice long-term upward trend where we can capture at least up to 72, where we had the pandemic breakout, and maybe even further, right? So that's the psychology of the trade, right? We have to know exactly what we're thinking about when we get into this. We know what we're going to do. We've got our parameters. We know that as long as price can hold this area here, we're excited about being long. Now, if it can't hold, that's no big deal. We've got a stop down here. Let's go ahead and drop this down a little tighter. We're going to put our stop down here at 67.95. Give it plenty of room to potentially break out if it starts going against us and fake out, right? We saw it trying to break out here and faked out. Well, it might want to do the same thing here. It might want to break below the support level for just a little bit. You know, it might want to do a little bit of this, come through, and then give us some minutia and then make its way back up, right? So we want to make sure that we give it some room to breathe. But if it goes too much further past our stop area, or if it starts to come too low down here, then we might be thinking, okay, we could be seeing a trend change of direction. But until we see that, we're bullish on this. This is a really good setup. So let's go back to our platform here. Got the trade box up. Again, if you are not long this, we're just going to buy at current market order, which is exactly our pending area, right? So let's use good money management. And here's two things about this trade. First thing, go ahead and write this down. We are going to get into this in two parts. Okay, this is good. This is good knowledge to have. Anytime I look at a trade and I know it's going to be longer term, I'm going to be accumulating to this. I'm going to be adding positions. I'm not just going to go all in and just hope for the best. I'm going to be strategic about it. So knowing that I'm getting in at a lower level and potentially giving it room to go against me, but ultimately I want this to go higher, I'm going to want to leave room for it to go higher. So if I don't risk more than 1% per trade, 1 to 2%, let's just say 1 to 2. So if I'm saying, okay, on this particular trade, I'm not going to risk more than 2%. So if I'm going to be adding positions to this on this first entry order, I'm not going to do more than say, I'm not going to do the whole 2% because I'm going to be adding to it. Okay. So I will do 1% on this first order, or I might even do 0.75%. But just to make math easy on me, for the purposes of this session, let's go ahead and pull up our calculator. Okay, so if at if at $100,000, I'm going to risk no more than $2,000, but at this particular entry price, I'm only going to risk $1,000, 1%, right? Well, 6890 to 6790. Let's go ahead and pop that in there right now. So all I did was click on stop loss. I'm going to put in 6795. Now the beauty of this is it already calculates it for me. Sweet. Love that. Love, love, love. My take profit, I'm going to want to throw that in there. We're going to just keep it at 72. That could change. Okay. So knowing that this is worth, let's see here. Knowing that this is worth $1.12, as we can see right there, and I can't risk more than $1,000 to start off with here. And I know I'm risking, as we can see, 95 pips, right? So that means that I can do a little over 10 contracts, right? So I would go over to my calculator here, and I would just simply type in 1,000 divided by 1.12, okay? Oops. 1.12 divided by 1,000. No, I had that right. No, 1,000 divided by, see, look how great my math skills are here, guys. By 0.0112, there we go. Okay, so I can do 11.2 contracts based off of my $1,000 risk, 1%, et cetera, et cetera. So what does that look like? That means that this would look exactly like this. 11 contracts. This is one contract. That's one. Well, I can do 11. So I can do exactly 11.2. So that would be 11020. Okay? And then as we can see here, we're risking, well, we're risking a little over there. What did I do wrong here? Maybe I did have that right in the first place. Let's try that real quick. Eight, 9, 8, 9, 0, 0, 0. Okay, so see, this is where you have to get really close with the numbers here. Okay, so closer, okay? But anyways, the point I'm making here is that we're almost right exactly at $1,000. So I want to be as close to it as I can, right? So and you can see, and the reason my numbers are off here is because it's not exactly 100 pips, it's 95 pips, right? So anyways, so that is what I'm going to do if I'm risking no more than 1% on this order. So I can do 89,200, which means 8.92 contracts, right? And I'm going to get in at market order. Everything looks good here. My stop's in place, submit, and we're good. And you can see it executed right there. I'm going to go ahead and close that, pull it up. All right. And you can see here's my order right here. 8.92 contracts right there. Okay. So that's our trade for the CAD CHF. I'm really excited about this. You know, I was happy for this to bowl on up because that is the direction that we want to go. But I am happy that it came back down. You know, it's always better to get a lower entry for those long-term positions because then you can add to it and you can add to it, right? You can just keep adding and adding and adding, right? We will pay attention to this very, you know, we'll keep this close on our radar, but we're going to let this breathe. We're going to let this move. You know, this is one of those ones that I don't have to be too worried about huge spikes. We got ourselves a nice stop room level area that we can feel like we have some room to breathe. It's way down here. So we've got all this area for it to work it out. But essentially, we really do want to see this hold right here. As long as this area right here can hold that, we're looking real good. Obviously, if it doesn't, we'll be strategic about how we manage it after that. But yes. Okay. So that's all I wanted to talk about on the CAD CHF. A whole mess of things happened that I'm going to just quickly run over today. And, you know, it was predominantly tied to one thing and one thing only, and that is this guy right here. We had this huge spike on the dollar index. And just like I've been telling you guys, the moment we have any kind of uncertainty in the market, the dollar will react. And it did. And all across the board, we saw pairs react to the dollar's strength and the market's weakness, right? You can see right here, huge wick. I mean, to rebound like that, that is a very bullish sign. So the one thing I want to make sure I'm very clear about here is I am not expecting a huge reversal. I think that there is a possibility of more weakness because of things like this. Here's our 200 moving average. We are really far away from our 200 moving average right now. But more importantly, it's very evident with currencies. We are very far away from our 200 moving average. When we see huge gaps like this, that's a sign for, okay, let's be cautious about how many breaks, or let's be cautious about when the breaks might be getting put on here. And they certainly did today. And this is the obvious thing that I wanted to refer to here is the dollar pairs and the Aussie pairs. So first, the New Zealand dollar. I think there is an opportunity here. There was an opportunity that I wanted to discuss last night, but this is something that you really have to ease your way into. So as a group, we're gonna start taking these more and more, but we weren't quite ready for it as of Friday night to Monday morning. But here was a really great play that was, some people would call a layup. So Friday night, we have price just going higher and higher, or sorry, not Friday night, Friday, we have price just going higher and higher, making further and further uptrends, right? So it just does not seem like it's going to stop. It's just chugging along. This is the New Zealand dollar, US dollar, right? So dollar's weak, market strong. That means New Zealand dollar strong, right? Well, the further we get, the further we keep going away from these pivot points, the more I see a opportunity for a short-term reversal, which we can absolutely profit on. And I've talked about this a few times. 1, 2, and 3. Look at all these pivots. They're just leaving them behind. And that's perfectly fine. Pivots can be left behind. These pivot points are not areas that have to be retouched. That is not the defining characteristic of them. What it is just an area where price is typically finds support and resistance, right? Well, when it's not finding it, and it's creating that gap, that's something for us to think about. I've talked about this a few times. Anytime we leave these things behind and we leave them in a very vertical fashion, like so, I see this as, hey, these things are typically meant to be retouched. Not always, but the more we leave behind, the more evident is that we're probably going to see these things get retouched, resurfaced, right? So when you have 1, 2, 3, that's just a lot of signals saying, hey, there's an opportunity. Now, this is actually a strategy, and that's why we're talking about this. So going back to this on Friday, I see this keep going higher and higher, and I look at this pivot point, I'm like, gosh, it is just running further and further away from this. And this one, gee, I mean, it's way far away from this one. Now we've got 2. Okay. Now what I'm looking for is I'm looking for breaks. And so I had this line drawn on Friday evening, and you can see that price stopped right there at 4 o'clock. Okay. I think that's Mountain Standard Time. Anyways, or what it, anyways. So at 2 o'clock, 3 o'clock Mountain Standard Time, 1 o'clock, 2 o'clock Pacific Time, I believe that's when the currency markets close, futures markets close. Okay. So this stopped trading right there. Saturday goes by, nothing. Boom. Right here, we have a break below the support. The reason I like this setup is it has a lot of opportunity to make a decent amount of pips in a quick amount of time with a low amount of risk. Okay. So I know that's a whole bunch of words that I just said. So I'll say that one more time. So these kind of setups, when you have a break of support like that or resistance, okay, and it breaks out of that ascending wedge, okay, and that's what that's called, ascending wedge pattern, okay, we have the opportunity for quick pips, low risk, okay, lower risk, okay, and I always like that. So how exactly would I have approached this? So first thing I'm thinking is, well, very simply, if I'm watching this was Sunday, so I think that's 4 o'clock, so 3 o'clock in the afternoon Pacific time. I'm watching this. Oh, market opens. We've got a gap right there, but remember, this is an hour time frame. This is a very short time frame, so we don't want to pay too close attention to any gaps on shorter time frames. So market opens, comes down, and boom, we've got a nice close below this ascending wedge pattern here. So when I see that, the first thing I can think of is, okay, I want to capture this because I feel like it's trying to retouch at least this prior support area right here. And of course, we have this pivot point solidifying that. It confirms that, hey, this is a significant area right here. So let's go ahead and draw and anchor that right there. So first target is go for this previous support right here and maybe even that pivot point, okay? So that pivot point will draw a line right to there, okay? So it goes all the way out to there. So I look at this and I say, okay, from there to there, I can at least expect 100 pips. That's a pretty good amount right there. And remember, doing the math on this, $1 per pip, $100. That's a quick, easy $100 because I expect this, if it moves in the fashion that it's going to, because it's just been going higher and higher, I expect this to happen quick. And it did. It happened real quick. So what I did was I got short right here at the close of this candle, but I want to make sure that I'm not getting faked out by maybe a little bit of consolidation, right? So consolidation meaning right here. This could have looked like it was breaking out right here. And it kind of just trends and continues higher, right? So that would have just been a consolidation move. So what if it was a consolidation move? Well, I'm willing to risk a little money to confirm that this is going to be a nice breakout. So I would have put my stop right above this area right there. Give it a little room, right? So from there to there, I am about 40 to 50 pips, okay? So no big deal. On this one, if I'm just using good money management, I would risk a little bit lower than 1%. I would probably do maybe 0.25%, try not to get too deep into the details here. But the purpose of this is to simply say, this is a simple 2 to 1. I mean, I'm looking to profit 2, risking 1. That's great. That's a great R&R ratio, risk to reward ratio. So I like this pattern. I simply would have just set this up, entered short, stop up here, target there, and within a few short hours, I'm out with 100 pips. And that's exactly what I did. That was a quick trade. I put it on, I walked away. I had my stop up here. And then what I do to make sure that it's still doing what I'm expecting it to do is I put my alert right there. Okay. So now I've got my alert right here, just in case price did one of these movements right here, right? Because it could have easily done that over here. And if it had, I would have been alerted as it's coming up, and then I probably would have exited early, risking even less. Okay, so the reason I bring all this up is there's going to be tons of opportunities that are not going to be drawn out like options are. Options, you know, we've got 2 trades on that I'm going to bring up here in a second, that we had 18-day expirations. I believe so, yeah, 18-day expirations. This was in and out and over in less than 24 hours. And these opportunities happen all the time. And I'm not telling you guys this because I want you to be glued to your charts. I'm telling you this because these opportunities are going to appear, and we want to try and take advantage of them as often as we can, because they help increase that balance where, you know, you have those winners and losers. That really increases that one quarter where, you know, you might have only been up, you know, 30, 40%. This can bump it up to 50, 60%. And that's what we're shooting for here, is we're trying to take profit and take opportunities as often as we can. So this was a nice trade setup, and I still think there's more to come. Okay, so this is the New Zealand dollar. I wouldn't short it right now, even though I see all these targets down here. I wouldn't short it right now because I feel like it already ran. I feel like if I were to short right now at this current moment, I don't like the setup, in the sense that the timing of it. These kinds of trades are all about market timing. You can never time anything perfectly, but you can be strategic about it. This has already made a nice little run, okay? And in the short term, it's over. What we can look for in a little bit of a longer term now, because we still have all these targets. We've got 1, 2, we've got all these targets. So what we can do is we can check to see if price might break this area right here. So if price comes back down to here and it can break that, I might be interested in targeting these lower areas, okay? With a smaller stop, not too big. We don't want to have a 200 pip stop, because overall the trend is bullish, right? We're not trying to be counter trend traders here, although there's going to be lots of opportunities to sell and make some profit in an uptrending market in currencies. It's very rare that I would do this with stocks and options. So that was the New Zealand dollar. The Australian dollar, that had the exact same setup. Exact same. You can see it right there. It was up and up and up and up, broke out, and just came all the way down, and in fact even hit that pivot point. Okay. So we've got all these pairs that have broken this trend that they've been trading in for quite a while, since November, in the dollar CAD, which is what we're looking at right now, November 4th, this thing has been downtrending, right? So to break above this, that's pretty. That's a pretty good sign that it's trying to take some profit off the top for all those people that were short the Canadian dollar, and try and capitalize on that nice long movement. So we had a breakout of this, and I still think there's a little bit more to run, but you can see right here, we're a little late, right? This would have been a nice short-term trade had we had gotten in down here. If we decide to get in here, then that puts my stop puts me in a position that I'm a little uncomfortable with. I would want to get in, so you can see right here, we have our official close out of this wedge pattern, but now we're a little high, which this is part of the issue of waiting for confirmation on longer term time frames, is you can be a little late. So you have to be a little bit more strategic, a little bit more aggressive, which which would have been good this morning. However, again, this is going against the overall trend that we're expecting. So it's not a big loss. There's going to be other opportunities, but you can see right here, if I gotten in at the beginning of this morning, my stop would have been down here, about 100, 115 pips. That's okay. I'm comfortable with that, because if price were to come back down again, I might close it out, because it's like, oh, that was a fake out. Whereas here, now I can clearly see price is trading out of this wedge. But now if I want to get long, now we're talking about 175 pips. Well, that's a little too much. That R and R ratio is no longer very good, right? But we do have missed pivots on the block here. We got 1, 2. We got 2 missed pivots there. We had this one right here. That was a nice target. We got 2 more. So if we see price giving us an opportunity, meaning higher, making a trend reversal here, then we'll look at it. But the reason I'm bringing this up is this happened all across the board, and I don't think that it's quite over. So here's where we could still potentially make opportunities, ones that haven't officially broken out of that block. New Zealand dollar, it's just now starting to break out of that block. We'll see if price were to come back a little bit. We'll see what happens here. Aussie yen, it's just barely breaking out of that block. But 2 things here. If I go to a week time frame, this is a serious pattern here. Can someone tell me what they see before I actually doodle it out? I'm going to draw it. Boom, 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 boom. Somebody. Inverted head and shoulders. Excellent, Tony. In Forex, oh, sorry, Tony, I totally missed this. In Forex, 1 contract is 10,000. Yes, Tony, that is correct. I hope everybody got that. 1 contract equals 10,000. Okay, so 100,000 equals 10 contracts. Okay, inverted head and shoulders. So the reason that I like this right now is, the reason that when I look at this and I see this potentially having a more opportunity to sell off, but I'm hesitant, is because this massive head and shoulders pattern, huge head and shoulders pattern, is now breaking right now. So what that means is, if I bring this back down on a daily, if this was the neckline of its proverbial target or entry area, then we don't want to go against that, do we? Absolutely not. Of course, right? We want to go in the direction of the trend. We want to meet these patterns and trade with them. So what I can look at this and I can say, oh yeah, here's an opportunity. It's just now breaking out of this ascending trend line here, and I've got some pivot points that I could target. However, this area it's on its way. So what I could look for maybe is a opportunity to get in long. So I'll watch this, and I want to be long this right now. So I'm going back to here and I'm saying, here's a huge opportunity. And if you were to measure this, just so you understand how this works, you would go from the neck to the head, and we'll go from the bodies, meaning we won't look at these wicks. We'll go from the neck to the head. That is 1,210 pips. As you can see right there where it says negative 12.100, that means 1,210 pips. You just carry that decimal place over. Okay, that is a ton of profit potential. How long did it take to do that though? That took 602 days. We're on a weekly chart, right? So that took a long time to do that. So if it took that long for this formation to play out, expect it to take that long for your target to get hit if we're playing that pattern. But it absolutely could, because look at this. So much room for it to go higher. So much room. So now I know here's my next trade, long-term trade that I want to start getting in on, but I don't want to get in where it's at right now because I think it's moved quite a bit. So what I'll do is I'll wait. I'll wait for it to resurface this area right here. And if it can trade around this area for a little bit, we're going to start buying these dips. Okay. We are going to start waiting for this to do some of this, and whoop, we're going to buy these dips. Okay. You could short this and try and make some money on the way down. That is absolutely a possibility. And it's something that I might actually even consider because the risk the risk to reward is not bad. So if we're wrong, we have about 60 pips of room here, because if this were to come back up here, I don't see why it wouldn't just keep moving on, right? This trend is moving up and it's looking good, and we don't want to get in the way of that. However, if I think that this is going to it's going to have some more legs to come on down, I could try and profit off of that. So we had this breakout here. It's retesting. So I could short this. On this one, I would definitely put this in as a lower risk trade. Meaning, if the most I'll ever risk on a trade is 2%, then on this one, I might risk 0.5%, right? So here's a trade opportunity that I kind of like right now that's happening. And on this one's going to be something you're going to have to monitor. So this would be considered a scalping trade. If that is not something that you want to just dive into at the moment, I completely understand. This is a much more aggressive trade to be looking at, but there is an opportunity on this one. If you did want to do it, you could enter right around where it is right now, stops up here, and then just watch price play out. If price does not move back down to this area within the first, between now and say end of trading day tomorrow, it might not be ready to move like we thought it was. But you got to give it time. Here's another thing. If you want to short this and capitalize on this potential movement down to the support area, as soon as this gets into profit, we move our stops to break even. So this is a whole mess of things that we haven't talked about before, but I just want to give you guys the strategy on how I would do that. So if I was going to be doing something like that, that's exactly how I do it. I would get short right around where price is right now. I would put my stop up here. If price goes 20 pips into positive territory, I move my stop loss to break even. So that way I'm taking all risk off the table. So then if I'm wrong, no big deal. If this starts to come back up, then I'll be watching it. Okay. So there's lots of different things here. Anyways, if you wanted to try that. But going back, all the Aussie pairs, they're starting to correct. They're starting to make these movements that I've been waiting for, because I've been talking about this over and over. The gap is just getting so big. It's getting enormous, especially on pairs like this. It's very evident when you see something like this that we're setting up for a little bit of a correction, right? The longer it goes, the higher it goes. You can see it was very clear right here. The bigger and further away it gets, the more likely we're going to sell off. So on this one, there's a nice opportunity to short this one, but the Australian dollar, I don't know. It has been more attuned to the stock market than I normally see it. I mean, anything that the stock market does, the Australian dollar is loving. So market's going up, Aussie dollar's going up. So that being the case, you know, we'd have to see a big sell-off in the market for this to really make that correction that that we'd want to see here. So we'll have to watch this one, but here's the kicker. Go ahead and right click and put an alert on right now. I'm going to keep you guys, I always keep you guys posted. You know that. I'm always keeping you in the loop, but keep your alerts now, because if price does sell off back down here, yeah, you could have made some profit on the way down, or more importantly, let's get in on this trend. This is a really good looking trend, and it's got plenty of legs to go, plenty of legs to go. Okay. So this would be a good area to buy dips. So Australian dollar, New Zealand dollar, there's just lots of opportunities on these pairs in the near term. Okay. The very, very near term. So I'm just going through all of them here, and there's lots of opportunities. So CAD-CHF is something that we're long on right now, and I see more opportunities coming. Here's the two verticals that we put on last week. Did everybody get filled on these? Tony, Joyce, Tone, Katie, anybody? These were, you know, I talked about these a lot. There's plenty of opportunity to get in. You should all be in. The profits and loss might vary, give or take, depending on what your fill price was. But I really like them. They're doing well right now. We got 18 days to go on this. You know, there was a nice premium to get on American Airlines, nice premium to get on Bed Bath & Beyond. So, you know, even if these go against us, which I'm absolutely prepared for, I see nothing but good things in our future for these trades. On this particular one, whether or not it breaks this or continues up, it doesn't bother me, because I want to own this stock, right? But this support level right here, it's holding so strong. We want these things to obviously stay flat or go higher. I mean, that's the simple pickup of the premiums. But when they go against us, we can capitalize on the long leg of the put, this guy right here. Okay, so that was Bed Bath & Beyond. We can capitalize on the long leg of the put if this were to go against us. Right now, it's not, so we're happy. But if it does, we can capitalize on that, close it out with a nice profit, and then we can end up owning Bed Bath & Beyond. And we could have a situation where our break even is, you know, down here, because we profited on that long leg. Anyways, these are all strategies, but the point is that this support level right here is holding strong. So that's good for our trade. If it does break it, I love it too. I'm excited all the way around, because we're going to make money regardless of the situation. This one is not holding, which is perfectly fine, because I was anticipating it to do one of two things. I was anticipating this to be a flag and do one of these movements right here. Okay, and then up, or break down and bounce off of this area right here and then continue on up. So it looks like the latter is what we're getting right now. We did have a nice bullish day, but we did have a gap down. So now that we're out of this little flag here, I see the latter situation more likely, but we have 18 days, guys. We have plenty of opportunity for this to manifest and work its way out. Either way, I'm excited about this one, just like Bed Bath & Beyond, because if it does come down here, we're going to capitalize on that long put leg, make some money on that. Then we're going to get assigned the shares. We're going to own the stock, and we're going to let price bounce around and then move on up. So really good things on these two trades. I'm loving these two trades. Okay, guys, that is all I had. I am still totally sleep deprived. I swear I haven't had 24 hour. I haven't had a 7 hour sleep day in at least 14 days. 6 to 7 hours is, I suppose, is what you're supposed to get. I haven't had one of those in 14 days. Is starting to. I think it's starting to melt my brain. But either way, I'm watching the charts at like 3 a.m. That's how I catch these things. If you're like, how did you see these things? Well, I'm just staring at my phone at 3 a.m, which is not healthy. I'm not telling you guys to do that. Don't do that. But I need to get some more rest and get some more Benadryl in me, right, Tone? But I'm very much alert and in front of the charts, you guys. This week is going to be probably pretty boring. We got Christmas on Friday, right? Friday? Yep, we got Christmas on Friday. And the market is closed. It closes early on Thursday. So Christmas Eve is on Thursday. Our session is normally on Thursday. So we will not be having our session on Thursday. I'm going to send out a message on Wednesday. We might try and do a quick little session on Wednesday, earlier in the evening, if you guys are available. I'd like to do just a quick recap between now and the end of the week. So that's probably what we'll end up doing. Give me 1 second here.